Right. So I'll go through the oscillator stack just so you guys have a little bit of a, because I'll be able to upload this after I've saved the recording. So default settings. Default settings, you'll have it on the momentum, which is what I've been using right here. You can have it on reactive as well. So the idea with the stack is that this replaces every other oscillator. You still have access to those in case you want to use them. Reactive, yeah, it's going to be a little bit different with the diamonds and stuff, a little bit, if you're more comfortable using those. Me coming from the Trendmaster side, I still like the harmony. That makes sense in my head because I understand that there's strength and trend, for breakdowns. The thicker line being the trend, and the thinner line being the strength breakdown. And oftentimes you'll see strength breaks before the trend breaks. So that's the way I use that. Default settings here as well. For some reason, the green is going to the downside. That makes my head hurt. So I usually invert the colors. You can also change them and have them like as trend or gradient. I haven't really messed around with those too much. It doesn't really bother me. The big things that really help in my head, the trend deviation. So when you see stuff like displays top and color schemes, back to the upside, just turn them on and off real quick. Right, you're getting your heat map on the upside when you're seeing like overbought, oversold conditions. I think it's powerful and it's good to have on there. The things that I like the most outside of like the OB and OS zones, so overbought, oversold lines and zones. Now the lines not super important to me, but the zones when it's in these like overbought areas, I think that's pretty important because now you're saying you have overbought structure, you have breakdown of strength, trend is starting to move down as the move's already happening. So again, the trend break was here. It still did a spike up and then a failure to go back to the downside. Let me go 1 hour. Actually, I'll go, 1 hour. That makes sense. So the other options of the stack that I really like to use, I love volume divergence and I love confluence, but I make some adjustments to them because I think they're super, super bright. And just for ease of like looking at the chart, I'll put it on momentum. So that'll give us, unless I just broke the shit. There you go. It'll be easier to read the stuff behind it. So for me, I want to see what the confluence is, but I'll turn the opacity down to like 30. That way I can actually just read what's going on below it. So the confluence lines, these kind of like chart, this is all three of the oscillators together showing you if they're in agreement with each other. So when you have structures where, like I'm looking specifically where the tops and bottoms are, like you can literally, turn this off, right? There we go. Now you're seeing a stack of confluence. And that to me is super important. So you're seeing the confluence of all of the oscillators saying that's the top, that's the top, the top's already breaking down. Okay, good. That's the bottom, that's the bottom. Oh, it's already breaking back up. Like 1 hour and 4 hour on this thing is super strong. And you also have the volume behind it. So let me turn that off and focus on the volume divergence. So the volume divergence is interesting. So it's showing inflows and outflows regarding capital. If money's coming out or going in. And a lot of times, if you're using this in confluence with like, the confluence chart, look at this. Like price already broke down, had some volume outflows, a little bit of sideways, and then it flips to volume outflows before the breakdown. Or how about this, where we actually have volume going up at the lows and increasing as the price is increasing. So inflow of volume and money coming in. I think there's a way we can get this thing to be more sensitive. Let me see if I can. There we go. There's your sign. Increasing the sensitivity a bit, especially on lower time frames. So that's really awesome. Just on volume flows, you can see changes and shifts. Here you have an upside volume shift. Like you could almost just trade these blindly on higher time frames. Almost. So with those things, with the confluence, I think these are the most important levels in my mind. They just stick out as like the most important stuff. And when there's confluence going together, that's just saying, hey, buddy, there's all of these things happening. I'll just put this back on because I like it too. And then showing bands, so you can have like the bands on the actual data. So if you see like a big change in the overall bands, that's a bit too much for me. I just don't use it. But like I said, when you're actually having breakdowns like that are already happening, let me just put the sensitivity back, keep it standardized. There we go. And the last thing that I really like with this is the divergences and the hidden divergences. So a lot of this comes really with when you're looking for failures or breakdowns of levels. The thing to remember with divergences, right? And I'll type it out so people can like regular divergence, potential break of trend, hidden divergence, and trend continuation. That's generally what you look at with hidden and regular. Doesn't matter if it's hidden bearish or hidden bullish or hidden regular or hidden or regular divergence or hidden bullish regular divergence or bearish regular divergence. It doesn't matter. It's the same thing for both. But the hidden divergences, and you know, if we just pop those up real quick, like, where's your sign? Why is everybody still trying to short? Oh, regular divergence, great. If you got a little scalp down, once we did the regain, it was over. Regular divergence, not even a big breakdown of structure. So the hiddens are still powerful because the probability is we're going to go up until we fail. So even though all of this is diverging bearishly into the downside, you're still getting good oscillator information, like on the higher time frames, like the 4 hour plus, saying, "Hey, hidden bullish divergence, hidden bullish divergence," you know, and that's still pretty crazy in my mind that they're still continuing. So that's just a little bit about where they are, where the reversal points. You can change this to a different color, like a yellow or something bright. If you want to see those little yellow dots, largely what's happening here is that you're actually having a breakdown where the oscillator's gone up to a certain level and then breaking back below it, showing a little bit of retracement. And for because I have it on harmony, that's also when it's on the bar there, it's actually showing a little bit of trend break. Momentum might actually be easier to use, and you're going to be seeing some changes between, again, momentum and harmony. I would highly recommend that you look at whatever you're trading and just have a look back of a small period behind you and then select harmony, momentum, whatever works best for you as far as finding out where are we continuing, are we failing, that type of stuff. And the big thing here is, like, the larger, for the momentum, the larger red dots mean there's a bigger potential failure, versus the smaller green dots is a bigger potential buy. I think 1 hour on this thing has been really solid the last 2 weeks since it's been kind of flat and up. But yeah, the hiddens have worked out pretty kind of nice overall, even on momentum. But I think my brain still works with the harmony. And you can have quick start modes, and this will just change some of the basic settings, play around with it. You understand that if you have the quick start mode enabled for different stuff, commodities, equities, whatever you change, it's going to be important that while that's enabled, you can't manually tweak stuff. It'll automatically set settings for you. So if you want to switch individual stuff, you have to have it unticked. This is for like quick starting. Like, I want to go right into gold, and I want to, commodities, and then enable, and then go. And you'll have some preset settings set up that might be helpful for you. But I highly recommend that you use manual settings, and you find out what works for you, and really start working on like what the specific turnaround points are, especially on momentum, on harmony, and then with the confluence. Because to me, the confluence is everything. Like, I think I might even just stop using everything and just use the confluence. And just leave it as something like that, and then just maybe pop the sensitivity up. There you go. Don't even need anything else. Increasing the sensitivity, just showing the spikes more wildly. Bang, top, volume switch, trend shift down, bang, local bottom, bang, local bottom, top, 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 switch bottom, going back up. I think I might just try this for a little bit and see how it works. Or if I'm on Bitcoin, I'm gonna try something kind of fun. I might try stacking this like I used to, and then merge all the scales into one on the right. Boom. I've got retail stablecoin demand and all of the oscillator confluence and volume on one chart. That's pretty sick. I like that because it saves me a lot of space. So play around with it, see what works best for you. There's a lot of potential with it. It's all about tweaking it to your settings. Feel free to, when you watch the replay, just to play around with the different settings. Let me just look at the chat because I've been rambling on for a while now. Okay, any questions there? It's open. Anything, feel free. It's open mic. Just, you're welcome to unmute yourselves and say hi or whatever. Notice that you invert the retail stablecoin demand. Yes. The reason I invert the retail stablecoin demand, and I'll separate these again just to so double check. It looks easy when I do it, MG. Dude, it's time. It's riding a bike, or like for me, like I can get away from it for a couple of weeks and just come back and jump right on it because I'm so used to the indicators. For learning the indicators fresh, it feels like a lot, and I totally get that. But the idea is that it's the tools that help you make money, and that's all there is to it. It's tools and insights, and on top of that, from myself and some of the other and all the other coaches that are just awesome at what they do. It's the whole package. So it takes time. It takes time to set it up, and it's if it was easy, everyone would do it, right? But for the on-chain demand, let me just answer your question. So retail stablecoin demand, why do I have it inverted? Okay, so I have a friggin' lizard brain when it comes to like eyeballing stuff. Like, why is this? It's going up. Why is it at the low? Retail stablecoin demand, that's the default setting. The reason that's important is that it shows a massive on-chain demand from retail traders, which is low volume or low amount, flushing money into stablecoins. So if they're massively exiting the market into stablecoins, and we know retail gets wrecked, if you've ever heard of the 80-20 rule, Google it. It's worth to understand and read through these. It's good theory. 80% of people are going to lose money. They exit the market. Oh, we're going down. Damn it, I'm losing everything. I'm panicking. In a week, we went down a total of like 1.5K. This is it. We're going to break to the downside. Hell no. That's the bottom. The reason I invert it, like I said, lizard brain. Now it looks like everything else on the chart, and the oscillators all flow together. Bottom. 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 Local top. Local top. Local top. Yeah, I think I'm gonna run it because I'm almost like the majority of my trades are Bitcoin when I manually trade. So I'm gonna run it together. If you want to stack them and just try it, you can merge into one cell below, and then to get rid of this, merge all scales into one on the right, and then it'll just merge the scales together. And there you go. Now you got 3 different oscillators, volume and retail stablecoin demand, all showing you shit on one chart, on one little box. I think I'm gonna run that for a bit, for sure. Missed everything, Max. You missed everything, sir. No. Just going through market update and then doing some oscillator stack stuff. When you flip stablecoin, does it mean opposite then? Yes. So when you invert the scale, it just means down is up and up is down. So high retail stablecoin demand means what? Means people are exiting the market. Is that the local low? Yup. Higher low. Oscillator switching back up. Volume coming back in. Upside. On the lower time frames, understand that the oscillators are lagging indicators. So they're going to be less, they're not less relevant, they're just harder to use. So when you see we have a massive deviation up, and then we have one last little pop that ends up starting to fail, like the only thing really to look at is the price action failure of that structure. Or you could do something like, I'm just guessing here, yeah. So MDVD, right? For the guys who haven't used MDVD before, what is that on a candle? That's volume that is left out of position. So that means when you have, even on low time frames, a massive amount of volume above current price and you're not gaining, it's not even in the candle like it was here. It's above, like way up in the wick. These guys are left holding the bag because they're smashing the green button because we're pumping. I don't want to miss the pump. Bam, you missed it. Not only that, you're actually liquidity for the downside. Bullish volume in position, bullish volume in position. Does it coincide with anything else? Not so much. How about here? Turning around. Bearish volume out of position. The real trick is going from the 1 hour and the 4 hour and then going to the downside from it. That's largely my argument across the board to use everything. Especially the 4 hour. 4 hours is the bread and butter. Like if you can get solid, like become an assassin on the 4 hour time frame, like where you could just take a couple trades a month, like bigger trades, higher time frame trades, hold them open on the 4 hour, you're gonna be laughing, like absolutely laughing, because the 4 hours that is like the, I don't know what you call it, like the golden zone, the Goldilocks zone. As long as if you can be powerful here and you can get the basics down and you become like a friggin' killer, like an assassin here, then you start moving down in time frame and down in time frame, and all of a sudden you're friggin' on like the 15, the 3 minute, scalping the shit out of it, which is possible. It's not hard to do once you've got the basics in as far as risk reward, stop loss, all that fun stuff. Yep. Keep trying, MG. And if you ever have any question, ask. If you ever have questions, just pop them in the indicator chat.